Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, everyone. So I gotta shoot the disclaimer. So, disclaimer: this video is for educational purposes only. The statements made in this program are solely the opinion of the show and are not specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. All right, everyone. So these two trades that I'm bringing up today, I did not put these on today. These are gonna be ones that I'm looking into tomorrow to put on. So first one I want to bring up is NextEra Energy. Now this is a utility company. Surprisingly, when we look at the chart, it does not look like the chart of a utility company. But this company has some good growth and is more involved in the renewable space. So it's definitely a utility that I've been looking at for a while. There's been some buying in this one before. I have not pulled the trigger, and the stock kind of has traded sideways. So this might be the time to get in. So as you can see here, there's some buying in these June 18th 72.5 strike call. There's some nice orders down in the time and sales. I think people putting down $300,000, $400,000, $500,000 within this option volume here. 5,000 contracts traded, open interest of 753. I like that ratio there. We always try to shoot for big volume on a smaller open interest here. But sometimes there's big volume and big open interest. It mostly matters on the volume and then what orders are down in the time sales. So let's check out the chart. Now, as you can see here, this is what I was talking about here. This one, in the last few years, this doesn't really look like a generic utility stock here, because of how much this thing moves. In a year, this thing moved up from 43 to about 60. Utilities, for the most part, have a slow, gradual movement up in their stock price. Sometimes even trade sideways, because they are mostly dividend stocks and really don't have a lot of growth, and it's more of a safety security type of investment. So yeah, as you can see here, NextEra Energy, it was at about 70 pre-pandemic, trade down to about 44, trade all the way up to about 87 here. It was getting pretty overbought here on the RSI, so it made a high at about 87. Now it's sitting at about 71. So I like to see people coming in and buying the dip. It's super hard to catch the falling knife on this one. I guess this falling knife has kind of already stopped falling here. It kind of looks like it's coming up here, coming back down. It's kind of making a small short-term double top. It could make a double bottom as well here. It may do that. So this is definitely a utility that I've kept my eye on for a little while here. So once again, I'm not in these calls, but I'm going to be looking to get into these ones tomorrow, everyone. So we'll see what happens, everyone, with NextEra Energy. Next one I want to bring up is MasterCard. Now, this is kind of a value play here. Obviously, I hope everyone knows what MasterCard is, the credit card company. But, I believe MasterCard and Visa don't actually take on the credit risk. So, that's definitely a plus for these guys. As you can see here, there's about 7,300 contracts traded of these October 15th 390 strike calls. Open volume of about 7,300, open interest of 35. If you go down to the time and sales, once again, there was some huge orders down there for these October 15th 390 strike calls. These ones are a little bit more expensive here. They're almost about 2,500 bucks here to control 100 shares of MasterCard here out to October 15th at the 390 strike here. But I like people who are putting big money down and they're willing to go out further and put more risk on the table. It's just kind of a balance here. How far do you want to go out versus how much do you want to pay? I think it's worth it sometimes to go out further with an option contract. Going out to a month expiry or like 2 weeks expiry is really cheap, but it's a really low probability trade. So, I don't mind putting down more money to go further out. I just find that that's a better way to control my risk. I'm still willing to cut the loss, and I'm definitely still willing to take a profit off the table if we get a nice double. So let's check out the chart here. This is another one that has underperformed for a little while here. As you can see here, I guess it hasn't really underperformed too much. But yeah, I mean, compared to like PayPal and some of these other stocks, it's definitely underperformed. This is definitely more of a old school play. This isn't like a PayPal or anything. This stock is reasonable at these levels in my opinion. It looks like it is having a nice breakout here above this 366 level. Pre-pandemic high was about 345. Made it up to 366, and it's just been kind of trading sideways. Hasn't really done much since about mid to late August of last year. So this one could be primed for a breakout. Once again, I'm not in these calls, but I just want to let you guys know that there was some institutions stepping in MasterCard. So thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up, and make sure to leave a comment down below if you got any questions. We'll see you in the next one, everyone.